think this is probably the scariest chart for people to look at. This chart is comparing February 2020 peak of the market to the current market right now, June 2022. And as you can see, Durham region is probably seeing the largest correction. And I think that's perhaps due to the fact that Durham region had the largest increase when it came to those price appreciations from 2020 to 2022. So what goes up must come down, and we're heading towards a balanced market right now. But it's happening very quick. So
Yes.
That shift from sellers to balance is happening very quick, and I wouldn't be surprised if we topple over to a buyer's market. If you're in the market right now, what I've been telling my clients.
What's up, everybody? Welcome to the channel today. I'm blessed here to be with Saman. So Saman, thanks for joining us here today. And for anybody that's new to the channel or even experienced to the channel, make sure you smash that subscribe button. It's so important so you get these updates. The market's changing so quickly, you don't want to miss an episode. And Saman's been getting some great views here, so I'm really looking forward to spending some time with Saman. I've got a YouTube channel as well. You guys can find me online. I've done a bunch of work with the channel before, but go look me up, Kory MacKinnon. I'm sure there might be some links here, but I'm looking forward to diving right in here. So let's find out more about the Oshawa area.
Thanks for having me, Kory, and thanks for hosting again. And we'll jump right into our presentation. We got some exciting data to go over. So again, everyone, welcome back to the Canadian Real Estate Channel. Today, we're going to be talking about the Durham region. My name is Saman Habibi, your real estate agent for the Durham region. I'm an active realtor in the area, have been doing this for some time now, full time, work with investors, with end users, and just overall trying to help people navigate through the crazy market. So what I'd like to do today is take you through May numbers, and then give you an update as to what's going on in the month of June. And then we'll follow along and talk about, the different aspects of what's going on in the market. So as of May 2022, the median house price in the Durham region was $930,000. That was down 7% from April 2022. However, year over year, we're still up 11% versus that should be April of 2021. And as of May 2022, the median price in Oshawa was $811,000. Slightly down from the month before, 6% down from April 2022, and up 9% from May 2021. The one thing that's really important to kind of point out here is that the year-over-year numbers, when we compare to last year, they're starting to creep very close to nil and single digits. And what essentially tells us is that we're getting very close to where the market would have been just in the beginning of 2021, where some of those restrictions were being put into place. In terms of days on market, that is another indicator that I've been following very close, because in late 2020 and early 2021, that days on market trend was very low. It was trending around 5 to 6 days on market. So listings would come onto market, and within 5 to 6 days, they were off the market, and very competitive.
The average person just doesn't know how fast that is. That is just like crazy fast, like things just flying off the shelf, because you can only buy a house so fast. I mean, it's crazy.
Pretty much, if you have 1 or 2 busy days at work, or you have a weekend, planned, you're likely going to miss that opportunity. You would have likely missed that opportunity in those earlier months. But luckily now it's changing, right? So we're seeing those number of days increase, giving people more time. I'm finding that the market is very calm in the sense that buyers are not rushing to get out there. There's all this news about interest rates and what's happening with interest rates, and what I'm finding is that people are waiting for that news to come out, see what the impact of that news is, and then come up with with a plan of attack. So finding that there's no urgency, there's no rush to get to market, and that's helping the days on market number increase, which gives people a bit more time to think about what they'd like to do.
Yeah, make sure that you stay tuned on this video here right till the end and keep watching, because Saman's got some really interesting charts. I was looking at them going, I can't wait for him to explain these, but really just highlights, okay, this is when this hike was done, this is when this hike was done, and we're coming up to another hike here in a couple of weeks. So you need to be like in the know when it comes to these things, and there's going to be some opportunities out there too.
Absolutely, absolutely. And the other metric that I've been following is that average sales price to list price. So, this is that that crazy marketing tactic that you see, that we've been seeing in the market, where agents list low, and then properties sell, significantly higher, and then they slap that sold over asking price sign on their advertisements, and essentially that number has also been coming down, trending downwards. So right now it's around at 108%. And at the peak of the market of Feb 2022, that number was 129%. So, that's really important for end users to keep in mind, people who are currently shopping, because when you look at that sticker price on the listing, or you're looking at House Sigma, you're looking at realtor.ca, that typically a house should be trading right now in this market at around 108% of the list price. Of course, this is not a blanket statement to make. Every house is different, but as a general rule of thumb, perhaps you can keep that in mind.
Yeah, pricing is so important these days, right? I mean, you want to be working with a sharp realtor that's in the know, like yourself there, Saman, or else your property could just be left hanging in the wind, right?
Yeah,
price too high,
absolutely.
price too low, don't get enough attention on it. It's so important.
Yeah, also a conversation to have with, the realtor that you're working with, just to make sure that they know what that number is, what that current number is, and does that strategy of what you're about to list, your property that you're about to list, does that line up with the current market? So if we take a look at June 2022, so what I've done is I've taken month to date. So today's June 15th, when we're doing this presentation, and these numbers would be the median price for all properties sold, excluding commercial, from June 1st to June 15th. So if we look across the board, essentially Ajax, we got Ajax, Brock, Clarington, Oshawa, Pickering, Scugog, and Uxbridge, all trading lower versus the prior month, with the exception of Whitby with a small bump month over month. And if we look at the numbers that I've highlighted in red, those would be the two areas that are seeing the largest decrease in median prices. And if I can just take your attention to the picture on the right-hand side of the screen, if you look at Brock and Uxbridge, those are essentially the two towns that are north of the Durham region, located in the north part of the Durham region, and they're essentially the furthest away from infrastructure, whether it's the highways, whether it's the GO train, or whether it's the downtown core, or where most of the employment would be. So I think the general trend that we've noticed in the GTA is that the suburbs are taking the biggest hit, but even within the suburbs, as you look at the northern parts or further east, those areas are also seeing the largest correction. So, you can look at this in two ways, right? You can look at this as an opportunity to kind of target those areas and look for properties within those areas that perhaps would fall within your budget. Or you can kind of say, hey, look, I don't necessarily have the tolerance for that kind of risk. And if there's going to be a larger correction, I don't necessarily want to be a part of it.
That's a big haircut. That shows you something here right now, right? Where people want to be closer to the bigger city centers. Things are open again, restaurants, able to meet people on patios and all different things, right? So it's important. Watch those trends.
Yeah, absolutely. And if we look at pretty much Whitby, if we look at that chart from Whitby to Union Station, where all the action is downtown, that's approximately a 50-minute GO train ride. From Ajax, we're around 35-40 minutes. From Pickering, around 20 minutes. And you can kind of see that reflection in prices that, that's where people want to go. People would prefer to be in Pickering, Ajax, Whitby, and then Oshawa, because it gives you the most flexibility to get downtown, whether it's for work or whether it's for entertainment purposes. And And if we quickly take a look at, again, what's happening month over month, so from month of May to recent June numbers, again, everyone's slightly down. We just spoke about that. But if we do a year over year comparison, again, those two areas of Brock and Uxbridge seeing the biggest decrease year over year, with some of the other townships now getting very close to single digits, and perhaps being at par. I think this is probably the scariest chart for people to look at. This chart is comparing February 2020 peak of the market to the current market right now, June 2022. And as you can see, Durham region is probably seeing the largest correction. And I think that's perhaps due to the fact that Durham region had the largest increase when it came to those price appreciations from 2020 to 2022. So what goes up must come down. Again, Scugog unfortunately is taking the largest hit over here with a 35% price correction. But with that said, Scugog is an interesting area because there are going to be a lot of executive homes in the area that trade at a premium and still do fairly well. But it's more so that the subdivision cookie cutter homes that are taking a larger hit here.
Yeah, so a lot more outliers in that area.
Yes, exactly. Yeah. So I have tried to essentially take into effect median numbers to kind of eliminate some of those outliers. But still, when we look at the data, there is a big gap between some price points in there, especially in Scugog and Uxbridge and Brock as well, which is where some of the largest corrections are happening.
Well, there's no doubt these are very interesting times with more properties coming on the market, more selection, more inventory, more choices. People can be more selective, and then buyers still haven't necessarily gotten the message. Maybe they're waiting for the telegram or the snail mail letter to reach them and say, hey, you've got to make sure that you're pricing your property appropriately based on the trends.
Yeah,
sure.
That's right.
This is one of those charts that I was looking forward to seeing here and have Saman dissect it for us.
Yeah, so essentially what I've done is I've taken all the towns in the Durham region, and we're looking at median prices from February to June 2022. This essentially shows us the decreased trend in prices. But essentially, we want to kind of point out when the interest rate hikes or announcements happen. So the first one is, seeing that movement from February to March 2022. That's the first red rectangle over here, where we see that the announcement was a 25 basis point announcement. And that's when we saw the first decrease in prices. And then fast forward to June 2022 is when that 50 basis point announcement was made. And then we saw a larger correction from May to June. And, I think it's important to point out that today, June 15th, the Fed's made an announcement that the next interest rate hike was going to be 75 basis points, which perhaps, lines us up to what may happen in July 13th, when Bank of Canada makes that announcement for our overnight interest rates.
Well, I'd bet the bank that home prices are not going to go up in the next month because of that announcement. That's a massive, massive announcement, biggest interest rate hike ever. We'll see. They've been following through on their last, what they said that they'd be doing previously.
Yeah, absolutely. And I think, if you're in the market right now, what I've been telling my clients right now, I'm working with a lot of end users at the moment, and, essentially educating them on what may happen. And I'm finding that the one question that I've been able to ask people, and kind of gives people that, puts them in that train of thought of a question that they need to answer for themselves is, are you comfortable making a purchase today and knowing that prices may continue to decline for the next 3 to 6 months? And I think, what people have to consider is what's their time horizon. Are they looking to purchase this property and stay in this property for the next 1 to 3 years, 3 to 5 years, 5 to 10 years? And essentially, the longer you're comfortable or willing to stay at the property, your risk is reduced. But if you have a short-term horizon, if this is supposed to be a stepping stone for you to get into a bigger house, and your time horizon to hold is 1 to 3 years, then I would say your risk criteria is higher. So I'm finding that my end user clients are people who have been trying to get into the market since 2020, 2021. So they're looking to purchase something that they're going to live in for the next 5 years. So they are comfortable knowing that prices may decrease, till the end of 2022, and perhaps a correction to follow. But essentially, if you're not comfortable swallowing that, knowing that there's going to be a price decrease, then I would say, with the announcement coming out in July, there's going to be a bit more of a correction. So if perhaps you're not comfortable with that and you're an end user, you want to wait a bit, by all means, I say wait it out, see what the impact of the July announcement is. So if we couple interest rates, the announcements to do with interest rates and then inventory coming to market, we get a clear image as to why prices are decreasing. So we have interest rates going up, which have an impact on affordability. And then we have inventory also increasing as well. So there is that fear in the market that, oh my God, prices are going to come down. Let's get our property on the market to let's sell. And, some of these properties are coming to market. They're not selling because of, again, the interest rate problem, but also the unrealistic expectations that sellers currently have.
What are you seeing for months on market here, as far as months of inventory?
It's starting to increase. We're around the 2, and we're heading towards a balanced market right now. But it's happening very quick. So
Yes.
That shift from sellers to balance is happening very quick, and I wouldn't be surprised if we topple over to a buyer's market. But again, I don't have that data to see what it's going to suggest in the next 2 to 3 months. But right now we're around 2 and we're heading towards a balanced market. And then, yes, so this is the average sales price to list price chart. Again, we started seeing a lot of that decrease in the average sales price correlated to when the interest rate announcements were made. Essentially, that fear that came to market, inventory that came to market, people were not sure what to do. Everyone was of the theory that they can list low and still get those higher prices. And although that list low was still happening, the problem was that appraisals were coming in lower than what people were paying for properties. So that had a bit of a correction in the market. As you can see in the later months, April, May, June, that mindset started shifting, and more agents were starting to list properties to what they were worth and encouraging people to essentially bring in offers at any time. So, there was that change in mindset for realtors, but also end users were kind of coming to that same realization as well.
It's important, right? Because if that appraisal doesn't come in where you want it to be, then you're ponying up the difference or getting some kind of a bridge loan or a line of credit or some other plan B that you weren't expecting to do. So you got to be really prepared for anything in this market. For the viewers watching at home, I think it's so important to be, really tied to a channel like this where you can get the updates. If you wait for 3 months, all that information is way outdated, right? Things are changing daily, weekly, and for sure monthly. So I'm getting a lot of value from all the stats here. This is awesome.
Yeah, I'd say now more than ever, tracking data on a weekly basis is pretty important, especially because the market is, taking into effect what's going to happen with interest rates as well. So we try and, keep some of the metrics, measure that on a weekly basis. So terminations, I do that on a weekly basis, sales price as well. So you're right, whoever you're working with, you want to make sure that they have up-to-date data and they're not waiting until month end to look at that data. So in summary, what's happening, Bank of Canada and OSFI, I would say, are at the forefront of all this. In terms of Bank of Canada, interest rates are up. So today I heard that the 5-year fixed is around 5.39 and the variable is around 2.85, with a July 13th announcement set to come into effect, which can see those rates increase. The scary point for me here, and Kory, I'd be interested to get your take on this as well, is more so surrounding the variable rates. I believe that most buyers right now are going with the variable rate. And, with a 75, let's assume there's a 75 basis points coming in, the variable rate will be around 3%. And then if there was going to be another interest, and as we get close to 4%, what does that mean to investors and end users? Would you be telling your investor clients right now to stress test properties at 4%? the message that you would be sending to people?
Yeah, I mean, it's so important to be in touch with your realtor, in touch with your mortgage broker, because definitely things are changing every single month here. And, we're definitely stress testing all of our properties higher. Now, do I think that interest rates are going to stay, like this forever? Of course not. They're not going to stay like this forever, but they're definitely trying to cool the market off, and they're definitely getting the results. So, for anybody who works for the Bank of Canada, you guys are doing a great job. Give us less hikes and stop working so hard. But it's a very interesting time, great time to learn about real estate. There's a lot more data, and there's opportunities to buy too. So, will some of those people that their property's been sitting for a month or 45 days, are they going to be more willing to play ball and look at all offers? Well, they should be, right? I think even a lot more. Have you been seeing a lot more cancellations and relisting? Like, that almost seems to be like a thing these days. Ad gets, listing gets pulled off and relisted at a different price or different pictures, or, fresh listing, or now they've staged it or whatever. So
in terms of terminations, that is a number that I've been trying to track on a monthly basis. And we kind of started that in February, March, April, May on this chart. And as you can see, there's an exponential growth in terminations and suspended listings. So the blue line is going to be the Durham region in general, and then the orange line is just Oshawa in specific. So, the scary part was the jump from April to May. So we, almost a third, I think, or around 40% of the listings in the Durham region were nearly terminated in the month of May, which is huge. And this all has to do with, in my opinion, this goes back to the unrealistic pricing expectation. Everyone's still caught up in February or March, and clearly numbers are down, and people need to come to a realization with what they can get for their properties. And I understand it's a hard pill to swallow. A lot of people have been purchasing real estate and kind of using, whether it's a principal residence or a second investment property, and they've been kind of making that a big, holding for themselves in terms of retirement or future plans. And unfortunately, if this is the time that you're looking to cash out for whatever reason, you are going to take a bit of a hit unless you can afford to hold it for slightly longer. So, if I would say, if your price expectation is not in line with what you're hoping to achieve, then perhaps you need to, circle back and look at your timelines and see if you can perhaps hold or come up with a better strategy. But yeah, terminations, as you can see, are skyrocketing right now.
Well, just another reminder. I mean, your house doesn't fit the pure definition of an asset, right? It doesn't bring you income every single month. So you have to be prepared for, fluctuations in that commodity price of homes.
And then if we just go back to this chart, the other thing I just wanted to quickly talk about was OSFI, in terms of what OSFI is doing. Speculations over changes to the home equity line of credit and stress test. In terms of the home equity line of credit, the banks are having a big issue with this because they're noticing that a lot of people are engaging in acquiring and having access to home equity lines of credit. And then, in terms of the control over what those funds are used for, is hard to determine. And as some of these prices are, as median prices and average prices are essentially pulling back and going, essentially getting on par with year over year numbers, I believe that the speculation is going to be that the banks are going to be required to take a look at the home equity line of credit, so that debt that they've issued, and essentially recognize that as a quote unquote bad debt and recognize it as a liability on their financials, which is going to have an impact on the overall requirement, that the percentage of asset that they're required to hold in order to match their liabilities. So, if that happens, then I would assume banks are going to perhaps maybe tighten those guidelines as to how much of a line of credit they can issue on principal residence, which can have an impact on investors and what some investors are doing. And also the stress test. There's word on the street that the stress test may also be impacted. So a bit of a speculation play as to what they're going to do with the stress test, whether they're going to ease in it a bit in order to combat the rise in interest rates. So we'll have to wait and see if there's any updates on the HELOC and the stress test. And yeah, overall fear in the market, financial markets are down as we know, and people seem to not be in a rush to get into the market. And I would say this is more so, the end user that's looking to purchase that house that they're going to be living in. So I've personally noticed that my clients are not in a rush. If there's any plans for the weekend and they can't make it out, they're not bothered. They're not asking me to go see the property on their behalf. They'll just wait for the new batch of inventory to come out. And that's actually happened to me twice, where two separate clients had plans and they kind of gave up for a week and said, that's okay, let's just wait and see what happens next week. Sure enough, next week, there's an inflow of inventory in the market. There's a good, batch of properties for them to pick from. And sure enough, they pick and they purchase something that checks off all the boxes that they're interested in. And lastly, unrealistic price expectation, overall confusion. We spoke about, price changes, termination listings, and essentially that number is high in terms of terminated and suspended listings, which tells me that there's confusion in the market and people are not sure what to do.
No, and things are changing fast, right? Like rate holds aren't lasting very long. Appraisals aren't being used for as long. Some people are actually asked to get a second appraisal before close just because things have been changing, right? They want comps. They'll only use comps from like the last 30 days. So these are definitely interesting times, and no surprise why people are confused if they're not like in touch with people that are in the know and literally studying this stuff every single day. Now is not the time to be lax in your home research if you want to be a homeowner.
That's right. And I mean, as prices are correcting, if you're finding yourself to be in a lower price point, and we say lower price point, but we're still talking about 700K, 800K. If that's your budget that you're working with, I would highly recommend you giving some thought to the Durham region, because there are quite a bit of properties that fall within that price range, and you'd be surprised with how many options you've got on whether it's a townhouse, semi, or a detached property or a link property. So last thing, what I wanted to do was, as prices go down, we may be attracting more buyers and new buyers to the area. So I just wanted to give people an overall view of the Durham region and, why a lot of people like the Durham region. It has to do with infrastructure, it has to do with the employment in the area. So if we take a look at this map, we have the Highway 401. Just north of that, we have the Highway 407, and we have two auxiliary highways, Highway 412 and 418, which connect the 401 to the 407. 412 and 418 are toll-free highways, so it's free to jump on, jump off, easy access from south to mid or to north Durham region. Coupled with that, there is the GO train expansion. So currently, the GO train is available in Pickering, Ajax, Whitby, and Oshawa. There's going to be two further stops in Oshawa at Thornton Corners and Ritson Road, and two additional in the Clarington area, so Curtis and Bowmanville. And this is essentially trying to encourage more people to go further east, because we're expecting the population in Durham region to double by 2050, I believe is the year. So there's going to be more people coming in the area, and as a result, they're trying to plan this infrastructure, this future infrastructure that will allow people to communicate, to commune back and forth between east and west, and essentially take some pressure off the roads. Also, if we look at the Durham region, Oshawa is home to Ontario Tech University and Durham College. And within Ontario Tech University, there's the ACE Wind Tunnel, which I'll show you guys a picture of later. There's also the Oshawa Executive Airport, which brings in a lot of small business to the area. If you look at the red bordered area, that's the Northwood Business Park. That area is 722 acres, and currently it's being planned for industrial, recreational, and open space use. So the plan has been approved and budgeted for by the Durham region. So in that area, there's a lot of development by big-time developers like Panatoni, which essentially builds Amazon warehouses. So there's a lot of that development going on in the area, and there's going to be a lot of industrial and commercial offices as well. This is the Ace wind tunnel that I was talking to you about. And the reason why this is important to mention is because this brings in a lot of business to the area and a lot of investment to Oshawa. So this is a wind tunnel at the university that allows this chamber to essentially imitate temperatures of plus 40 degrees or minus 40 degrees within a very short span of time. In this picture, they're essentially testing a Tesla car to see how well it can hold in Canadian temperatures and weather. And they also do this with the Olympic Committee, where they're testing Olympic suits. They do it with aerospace wings. So there's a lot of different things that are happening here. There's a partnership with GM and Magna, which essentially allow them to bring in their parts and their developments to test within the ACE wind tunnel. In terms of GM and what GM is doing in the area in Oshawa, they've created a test track where they're going to be testing a lot of their electronic vehicles or parts that they have in electronic cars. And they're also encouraging other EVs to bring in their cars and test them at their location and facility. If we go from Oshawa to Whitby, this is an exciting project for the Durham region. It's the Nordique Spa, essentially an indoor-outdoor spa where it will be open all year round. And essentially you have access to indoor pools, outdoor pools, and several saunas in the area. So right now, if you wanted to get an experience similar to this, you would either go to Blue Mountain, to the Blue Mountain area, or you would go to Quebec. So this is supposed to give people the option to stay local and be able to go essentially travel to and from within a day, within a couple of hours. It's supposed to bring in a lot of tourism. So the Whitby area is going to be experiencing a lot of tourism. And as a result of this, we're seeing more restaurants open up, more housing being created, more high-rise developments going up. So it's going to be a really cool and exciting project for Whitby and the Durham region.
Definitely. I know it did a lot for Collingwood, so I'm excited to see what it would do for this area.
Yeah, absolutely. The Pickering Casino. So this is a brand new casino that has opened up in Pickering. It's essentially supposed to encourage people to come to Pickering, spend a night there. There's a hotel attached to it. There are several restaurants there. There's it's supposed to be a very nice entertainment area. In addition to the casino, there's also the Porsche racetrack. So this is going to be nearby, and essentially it's supposed to encourage people to, test up the cars and bring their own Porsche vehicles and take it to the track and test it and push it to the limits. And, also supposed to give people at the casino an option of an additional thing to do. So really cool developments happening in the Durham region. When you look at it from a infrastructure point of view of having access to the highways, the GO train expansion, and now coupled with entertainment coming to the area, I think these are some of the reasons why Durham region has been popular, and it's a reason why it's going to be doubling in population very soon.
Amazing. No, that's an awesome experience. I've been fortunate enough to purchase one of those types of cars this past year, and I got some friends that literally wear out their tires every time they go to the test track. So
Yeah.
But I always tell people, it's like, hey, get in front of a trend. If this is the future of the area and there's some big things coming to the city, get in earlier versus later when it's going to be more expensive, right? So people are always rewarded for being one of the first to go, or the first to step up, or the first to put their money where their feet are, for sure. So
absolutely. I think based on the feedback that I've been getting from my clients is that they are comfortable coming to the area. People are driving around and they're seeing the development happening, and it's not what it used to be. A lot of people looked at Oshawa and kind of labeled it as GM town. That is no longer really the case. I think GM only accounts for 6% of the economy here, and the remaining 40% comes from education and healthcare. So it's a very diverse area, but all in all, a great area to be in.
Yeah, not super overbuilt. I mean, people get more for what they pay for, I imagine, out that way as well, and it has more of a town feel versus like your neighbors are on top of you type of a feeling.
Yes.
And
Yeah.
the automotive industry is almost becoming more like a tech industry, right? When you look at Tesla and yes, GM and what everybody's doing with electric cars, it's definitely changing. It's not the stigma that automotive used to have a decade or two ago.
Yeah, no, I agree. And I think the good thing with GM and having a presence in Oshawa is that they have made an announcement that they're going towards EV. So, with that said, perhaps if production increases and more testing is required, the facility is ready to go here, right? So, if anything, perhaps there's a rebound in all their plans with more employment. But I know that that land is being put to good use with PPE equipments being produced there as well. So, good things. I think it can only go up from here.
Excellent. Well, how can people stay in touch with you here, Saman? To get more information or to book a call with you. I thought this was a great presentation, so insightful, and people really need to be in the know when it comes to buying or selling these days.
Yeah, absolutely. You can find me on Instagram at Saman Habibi _real estate. I'm also active on Twitter at Saman Habibi _RE. And more importantly, if anyone has any questions or wants to talk about their personal situation when it comes to the Durham region, perhaps you want to move here, we'll have access to my calendar in the show notes, and you're more than welcome to book a private call with me.
Amazing. And if people liked my banter and whatnot, I've got a YouTube channel as well. You can find me on YouTube. You can find me on Instagram at Kory MacKinnon. Any final thoughts here, Saman? Anything else you'd like to make sure the audience knows as they're watching today?
Yeah, I mean, more importantly, I think we have a good roster of people who are putting out content on the channel. So subscribe to the channel just to stay up to date. And more importantly, everyone has a unique situation, unique timeline. So if you just want an opinion, a second opinion, feel free to reach out to any of us. If Durham region is the place that you want to consider calling home, as I mentioned, more than welcome to give me a call and we can talk about your personal situation. But otherwise, stay active. Don't sleep on the market because opportunities are there for you.
Yeah, get prepared, get pre-approved. Some people think that it's like, oh no, like when I want to put in an offer, I'll call my mortgage broker. It's like, no, that's not the time. Go do all this stuff in advance. Get all your ducks in a row, get your finances, get your taxes done, whatever you need to do, because this is just a great time to be ready for real estate with more inventory hitting the market, more selections, more options, and more houses you can actually get through for showings too. So, well, until next time, make sure you are tuned into the channel. And the only way you can make sure you don't miss an episode is hit that subscribe button, give this a like, give it a comment. We're looking forward to seeing what you liked about this episode here. And until next time, friends, keep investing in real estate, keep buying real estate, keep watching the channel. And I know it's one of my favorite channels here when it comes to all things finances and real estate in Canada. So until next time, we'll see you really soon.